What's going on, everybody? Welcome to Inside Guelph. I'm your host, Steve, and today we're going to be doing the end of March market update on the real estate market. All right, so I'm going to go over a little bit of agenda here. So right now what we want to do is, if you want to get involved in the conversation, make sure you do a comment below. We do a draw for any random, we do a random draw for top commenter, and then send them a gift card of $100 of their choice to get the conversation going. And Mohammed was the one that won the last draw. Only 2 people entered, so it was pretty easy to win. So we're gonna send that gift card out to you. Thanks so much for participating. And if you do want to get notified of this kind of content in the future, please be sure to hit that like button, subscribe, notification bell, and you'll be updated with the latest content. All right, before I get into the market update, the next thing I want to talk about is some new segments we got going on. Today we just did an interview with with Respite Air. Sorry about that. We did an interview with them today, and next week that's going to launch out. Stay tuned for that. It's going to be awesome. It was a lot of fun shooting it. And the week after that, we're going to be doing an interview with the mayor of the city of Guelph, Cam Guthrie, talking about the economic development for the city of Guelph. So hopefully I can find my words here. I'm a little bit stumbly, but let's get back on track. All right, so great. Who are we? So we're the Zahnd Team Real Estate Advisors, and we wanted to create Inside Guelph to get you connected to the local real estate market, as well as local leaders and local businesses, so we can all stay more informed and continue to support local businesses, because to have a thriving community, we need to support local. We offer a guaranteed 5-star real estate experience, and if we don't provide you that 5-star real estate experience, we actually pay you the commission back. So if you are looking at buying or selling real estate, or know of someone, definitely check us out and compare us to someone else that you might be looking at. Okay, cool. So let's get into the real estate market update. Man, has it been a crazy real estate market or what? And to kick it off, I do want to jump into the year over year. This isn't something I usually do, but I want to, just before I jump in, and show you the quarter over quarter data. And it's pretty interesting here. So let me see if I can zoom in for you here. There we go. So as you can see here, in the first quarter of 2021, we sold 751 units of real estate. That's actually 29, almost 30% more homes sold than what we did in the previous quarter. On top of that, the average sale price is $738,000. For those 751 homes, the average sale price is $738,000, which is a 27% increase from the previous quarter last year. So Q1 versus Q1. These are the numbers we're looking at. And then if we look at what the average sale price was the last quarter, which was October, November, December, you can see that the average sale price was around $650,000, and now we're at $738,000. So we're at a 14% increase just from the last quarter. So the Guelph real estate market is legitimately on fire. Average days on market in Q1 of last year was 19 days, and the average days on market right now is 9, so a 53% drop in days on market average. So quarter over quarter, absolutely on fire. I hope that you can see what's going on here. If you have any more questions about the real estate market, make sure you reach out to us. We can walk you through it. If you book a strategy call with us for you, we're going to walk you through the entire market as it pertains to your situation as well. So make sure you check that out. All right, diving into the presentation here. So as we usually do, we kick it off with what's currently on the market. So let's take a look at that. I'm going to bring the things in for you one at a time so it's a little easier to digest. So currently what's on the market, our 5-year average in April is 255 homes for sale. On average, we usually have 255 homes on the market. Last check-in, we had 130, and right now we got 131 homes. So a whopping 1 home gain. Not really the gain we were looking for. So typically the product mix for our 5-year average is 140 singles, 13 semis, 50 towns, and 52 condos in April. That's usually the product mix we have. Right now, as of today, you have these options. You have 74 single options, 4 semis, 25 towns, and 28 condos. So almost half. Usually now you have about half the options as you usually do, and you're competing with a lot more buyers. That's why the market is so hot. Okay, cool. Let's dive into what's going on. Here's some numbers I want to bring in for you. Based on our last check-in, that means we have 7 more singles on the market versus last check-in. We have 1 less semi, 10 less towns, and 5 more condos. All right, cool. So what's the sales flow looking like? Well, last time we checked in, there was 12.53 properties coming to the market every single day, which is a 34% increase of our average of 9.34. So what actually has happened to end the month, we actually had an increase to 13.77 homes coming to the market every single day, which is a 47% increase. And then on the outflow side, last time we checked in, we were at 9.3 properties leaving the market. So I mean, if we have that increase in inflow, it would be super great that outflow would maintain that same pace at 9.3, which is about 31% more than what our average is. So did we maintain that pace? Unfortunately, no, we did not. In the last 10 days of the real estate market in March, the last 10 days saw a massive increase in outflow, and it actually averaged the whole month up to 11.6 homes out of the market per day, which is actually a 63% gain over our 5-year average. So just out of nowhere, the Guelph real estate market really picked back up in the last 10 days of March and really averaged us up quite a bit to consume a lot of homes. So just to show you here, on average, we bring in 290 homes. We brought in 427 homes, which is 193 homes more than average, which is phenomenal. You needed that. And on the outflow side, we usually see 221 homes leave the market, and we actually had 360 homes leave the market, which is 182 more than the average. So as you can see here, we didn't really make that much of a net gain, considering we've also had 57 properties fail to sell. So right when you see that 427 came in, 360 left, plus then 57 failed, there's about a net gain of 10 more properties came to the market than actually either sold or left by failing. So really not the net gain that we were looking for to balance the market out a little bit. So based on these numbers, what's going to happen in April? So let's take a look what's going to happen. When we started April here, which is today, we started with 118 properties that started the market. We already had about 15, 16 homes come to the market already today. And we're forecasting an ending inventory of 85 units for sale, which isn't ideal, I know. And that's comparative to the 5-year average of 230. Okay, so if we look at the last 10 days, we had an average inflow of 15 properties per day coming to the market. So that's a huge increase. So that would, if we maintain that pace, we would have 450 homes come to the market in April, which would be one of the highest months of inventory inflow ever. On the outflow side, in the last 10 days, as you can see from the previous chart, this is much higher. We had 14.1 homes leave the market every single day over the last 10 days, which would mean if we maintain that pace, 423 homes would leave the marketplace. And if we had the same amount of homes fail to sell this month as we did last month, you can see that if you take the 118, add the 450, minus the 423, minus the 60, we'd only have 85 homes left on the market, which would be dramatic, which is extremely low and a bit concerning for sure. So if you look at that, the months of inventory, which is how we measure how hot a market is, we'll be sitting at 0.2 months of inventory. So the way we get that number is if there's 85 homes left and the market wants to consume 423, that means all this inventory would be gone in 0.2 months, which translates into about 6 days. So in 6 days, all the inventory would be gone, right? So you can see that the real estate market is just continuing to fire up more and more. Cool. So when you compare that to the averages, right? If we continue to have 15 homes come to the market a day, that's actually a 61% increase over a 10-year average. But if we have 14 homes leave the market a day, it's actually an increase of 97% over the average, which is just wild. All right, cool. I hope you find this information useful, and I want to bring in now the average sale price chart to show you how February ended. So last month, we had $736,000 average sale price. Now we have a $752,000 average sale price. So month over month, we did a 2.12% gain, about $15,600. And then if we bring in the chart for year over year, we were at $590,000 in last March, and now we're at $751,000, 27.39% gain, $161,000, $600 gain. So if you did buy in last March, you're up 30%. And as you can see, If you bought, in the beginning of the year last year in January or February, you're up even more. So congratulations if you got in the market. And that's going to be a little bit of a segment where we're going to talk about later about if you're sitting on the sidelines, you're really seeing a lot of wealth evaporate from your net worth. Okay, cool. So let's take a look at some indicators and see what the market's doing. As you can see here, the gray line is average. The purple line here, or the blue line, depending on how you see it, is last year. As you can see here, our inflow is just skyrocketing, which is exactly what we need to keep up with the demand. And when we look at the consumption, it's also skyrocketing. So we're really lucky that people are putting their homes on the market, and that they're bringing inventory to the market. Otherwise, this would be I wouldn't even know what would be going on. It would be quite the experience if we weren't having this inflow. So what I did last time was I stacked inflow and outflow together, and the gap was actually decently wide last time we checked in because there was only 9.3 homes leaving the market, and we had an increase in inflow. But since the last little bit of the month really heated up, that gap has closed quite significantly. And you can see here, just based on the consumption and inflow trend, we're staying really consistent here with the amount of consumption we're doing versus inflow. It's very tight, so there's not a lot of room for error. So if there is a drop in listings coming to the market, the demand is just going to gobble it up real quick. On the flip side, if the consumption drops off a little bit, that's actually going to be good for the market to balance it out a little bit, which is what's needed. So hopefully the inflow keeps going up and consumption will tail off a little bit. Here we see the days on market. Days on market is trying to tick up a little bit. It's trying to get it up there, but I mean, again, it's well below the averages in last year. List price to sale price ratio, it's on its way down, which is good to see. That it is an indicator of cooling, but it's still really high. So I mean, it's not that good of an indicator that the market's cooling. And homes for sale, as you can see here, very low again. We're sitting at all-time inventory lows, which isn't helping the situation either. So just want to bring in these graphs like I usually do over the last couple of shows, and just to show you the trend of what's going on long term here. So here's the inventory trend, 2017, 2021, super low. We got inventory, list price to sale price ratio, and days on market, all at all-time lows here. So if you're thinking about potentially, if you're sitting on the sidelines, you're like, hey, I can see that in 2017 there was a drop. For sure there was. What happened is that the government of Canada stepped in and imposed some new restrictions and increased qualifying rates, and actually made qualifying apply to people with over 20% down as well. So they were attempting and on purpose trying to cool the market. Just based on this article that was released not that long ago, the Bank of Canada governor acknowledged that there's some signs of excess in the housing market right now. But downplayed it, and saying that right now the economy is weak. We're just coming off the second wave. I think we need to support the growth. So essentially, like, hey, we can't cool the housing market. It's propping up our entire economy, and if we cool the housing market, we're going to be in real big trouble. So a very different tone than what we had in 2017. But let me just go back here and just see if I can give you some advice here. If you're looking at buying, there is no indication right now that the government's stepping in to cool the housing market. So if you're sitting on the sideline hoping for a correction, well, you could technically be missing out on a lot of net worth gain to your bottom line. And I've been in real estate for over 10 years now. They've been saying that there's going to be a market correction for almost 11 years. If you would have taken that advice and sat on the sidelines and listened to the fear mongrels of the newspaper, you would have lost a lot of equity, right? There's one guy that I'm following. He's like, "While you sat on the sidelines, I built an empire," which isn't, which is very accurate. I mean, that if you were accumulating properties, you were doing very well for yourself. So if you're waiting and timing for a crash, you could be losing a lot of money. On the flip side here, if I gave you a chance to go back to 2017 and buy at the very top of the market, would you do it? And of course you would, because if you look at the top of the market in 2017, right before the dip, and where we are today, it's a no-brainer that you'd go back to that time frame and buy at that time. So if you're buying and you have a long time frame and you have a long outlook horizon, you can do very well in the real estate market. If you're potentially buying for 1 or 2 or 6 month hold, yeah, you could feel some pain. because if there is a correction coming, or if the government does step in to cool the housing market and you bought at the very top here and your plan was only to hold for 6 months, yeah, you could definitely feel the pain. I wouldn't advise a short-term strategy in real estate right now. On the flip side, if you're selling a house, this could be the top of the market. I'm not saying it is, but it could be the top of the market. And if the government steps in to cool the housing market, unlike a buyer, where a buyer can wait and hold on to a property for long term, are you able to hold on long term to recover the potential sale price of your home? For example, if you're close to retirement, you need to get out of your mortgage, something's going on in your life where you need to get out of your house. Could you afford to wait 3 more years to do that if there was a correction? And if the answer is no, then now is likely the best time to sell. Because yes, the market could continue to rise, but if there ever is that correction, you don't have the same luxury as a buyer does, and potentially to hold that long term. So if you need to get out, I would recommend getting out. All right, well, that's my 2 cents there. If you're interested in working with the Zahnd team, we'll have a link below. Just reach out to us, check out our website, check out our reviews. We offer a guaranteed 5-star real estate experience. And if we don't give you that 5-star experience, we pay you the commission back. So you have a no-risk option working with us. So we'd be happy for you to reach out to us. I hope you found this valuable, and definitely make sure you check out that interview we did, and then also make sure that you tune in for our interview with the mayor coming up in a couple weeks. Thanks, everybody. My name is Steve. Appreciate you joining us for Inside Guelph today. See you later.